All right, and then talking about composure change, I definitely want to talk about gold. Scott, let me tell you what I'm noticing here. First off, we have gold rallying in overnight trading over in Asia. Strong physical demand. Premiums are the highest since February in Singapore. These are big deals, right? Then 4 a.m., boom, European markets, then U.S. markets really drag the price lower. To me, that says that fundamentally nothing's really changed and that this is technical trading, perhaps profit taking, margin calls and all that. How would you be thinking about gold?
So there's a lot of forces at work because gold is traded around the world overnight. So there's like you could be right intraday and wrong overnight, wrong intraday. So obviously I only trade intraday because I have to sleep at night. It's been long days. So I come in and I look to see the action. So right now gold itself, the GLD is down about 80 cents. There's a new lower range being established in gold that traders are trading against. We broke that 1800 and now we're hovering above 1600. I think it's very important to watch this range. If you look at the chart, you will see, this is when we broke that upper area. That was that outside day, a day to take notice. That's why we always talk about it, because look what it led to. And now traders are trying to figure out, was this enough of a pullback? We're still above the 200-day. We're still above the previous, support. So I would say if you want to trade long, trade versus 155.27 in the GLD. But if we start breaking below 155, you're going to see people start pressing some shorts. But that also is dangerous considering where we came from, because look at everyone who pressed the shorts in the S&P below 1100. They're in a conundrum right now. So it's a tricky trade. I think tier one long if you have a long-term thesis in gold.
I want to say two things in terms of price action also. I've heard that 1480 for gold prices is kind of the line in the sand. We're game off. We really have to rethink stuff. But if you look at Bank of America, Goldman Sachs 12-month price target, you have Goldman Sachs reiterating its price target at 1860 and Bank of America 2000. So I just want to point those out.
If those price targets are met, I would be very
surprised.
12
months. In 12 months.
12 months. No, so not the end of 2011.
Right.
All right, 12 months maybe.
All right, fair enough. Let's go to some stocks. Want to hit on Newmont and Randgold. First, go to Newmont. Ticker is NEM. It has that juicy dividend, tend to be holding up better than other stocks because of it. So let's see what the price action is.
Well, Newmont has been an institutional favorite. They started to add to it. You still have to time these things well. We talked about it when it broke its downtrend, and then it got a little iffy at the top. If you look at Newmont, yesterday was a decent area to buy. This was that, the downtrend. If you want to take a step back and look at it, this is when we first really started to say it started acting better above 59. And then you had a nice move to 70. So you always have to monitor the action. Then you had this inside, bear trap, they call it. And then you really had to get out when it broke this uptrend right here. So that was around 66 now. It retested that downtrend, uptrend, downtrend. Anyway, if you want to be in one of these, this one has a dividend. I would say you be in Newmont. But if you don't want some risk, make sure you have a stop in at yesterday's low around 58.
And to be fair, a lot of gold stocks do have dividends. This one has a sexy one that's tied to the gold price. So whatever they sell the gold for the quarter before, that's the average price. That's what they pay out in dividends. So anything over $2,000 for gold price is going to be pretty juicy. But we're probably not going to get there this quarter now. All right, and then let's go to the risk. Let's go to Randgold, ticker GOLD. Have been holding up really well, basically on some fundamentals. Had some really good second quarter results. What are you seeing?
Well, here you go with GOLD. This one, a little bit more speculative than obviously than a Newmont. It had a really good move when it broke above 90, and this was your, area to really watch. When it couldn't get above this 115, when gold started to come down, you had to say, I better get out of the way if it breaks this mini uptrend. And it broke 105. That was your out, if you didn't sell into some of the strength. And now it's trying to hold that prior area. So if you want to be long this one, if you want some minor exposure, make sure you're long and put a stop, I would say, around 90. There is some room, to maybe get back up to that 105.
And then wrapping this segment up, I just want to touch on silver really quickly. Has obviously not been a favorite with retail investors. Is it a cute trade now for you?
I think silver is just showing so much relative weakness compared to gold. They tried to rally it, when gold was actually acting well, and then as soon as gold broke, silver broke harder. If you take a quick look at silver, it looks like lower prices here. It's desperately trying to hold on to this range. It's a tough short, but I would say if you're looking for a long, you better have a long-term time horizon. And if you don't want to have much risk, use this 28 on SLV as your stop.
Yep, fair enough. You have to wonder what price though does industrial demand start to kick in at cheaper prices. So we'll have to watch out for that. 25.5. All right, there you go.